This could trigger huge market gains in September, which we're only a couple months away. There's three things we're going to cover today. Number one, the job markets. It's not as it seems, putting pressure on Jerome Powell to lower interest rates. Number two is Brad Garlinghouse hinted that the Ripple case may end on the back end of September. And number three, now the SEC has tons of pressure. Coinbase is going after them to look at their emails. So we're going to break that down today. On the back end of every video, I repeat exactly what I'm doing repetitively so it gets ingrained in our subconscious mind. So let's dive into the first. We're going to start with some funny news here. This cracked me up. So our CFO put this in our chat. It was like, holy moly, this is embarrassing, guys. This is embarrassing. This is the cover of the Economist magazine. I mean, gosh, it's sad to see. It's funny, but that's the reality. This is how sums it up. Economist magazine, great job in regards of summing up how people look at our country right now. No way to run a country. July 6, 2024. This is the cover of the Economist magazine. I mean, I'm just blown away. No way to run a country. We are literally being watched every minute of the day. I mean, we got July, August, September, October, November, less than 5 months where our lives are going to radically transform in America. Whatever happens on November 4th is going to be our future for the next 100 years. This next 5 months is so critical to our family's success and timeline and to the middle class. This is it. I mean, we were laughing, but I was like, oh my gosh, this is serious stuff. Okay, so let's dive into this. But I want to share with you guys the key factor that I'm sharing with you guys you need to pay attention to. You have to understand macro and microeconomics in order to succeed in these markets, okay? So the effect, this was off of U.S. Bank Wealth Management site, says the effect of the job market on the economy on July 5th, 2024. Okay, so the job numbers have come out, but I'm going to take you a little bit deeper into those job numbers. Okay, so remember, Biden keeps bragging about he has the strongest economy. It's a post-pandemic economy. Everybody came flooding back to work. Okay, of course, people have jobs, but now it's starting to normalize. Okay, unemployment is going up, but I'm going to share with you they're padding the numbers. Well, I'll let you decide and I'll let you comment down below if they're padding the numbers. We're going to see where those jobs are coming from, right? As I look around the landscape, we've had 8,000 warriors worldwide go through our academy. We have 1,200 active warriors in our academy right now that are active. We are hearing from our warriors that they are getting stressed financially. People are worried about their jobs. AI technology is taking over. Let me give you an example. Okay. We ordered Uber Eats. Is it Uber Eats? Postmates this weekend. It sent me an alert and it said, would you like to sign up for an autonomous driver to remove the tip? They're taking away gig works. They have autonomous in Arizona. They have autonomous, I think it's called Waymo or something like that, taxis or whatever they're called, ride share. Now, Uber Eats, you can forego the tip. An anonymous car or not anonymous, autonomous. Is that autonomous? Autonomous will deliver. Guys, they are removing, robots are coming in and taking jobs. So you got to get on the investment side. Okay, so I just want to share this with you guys here. This is the key factor right here. Investors are keeping a close eye on labor markets as a barometer, not only for the economy's strength, but what it may signal for the Federal Reserve as central bankers assess monetary policy. I came from the banking system, and the bankers that I know are like literally biting their nails, hoping that these rates are going to go down. They anticipated, but they didn't go down, right? That was baked into like January, February. Now the rates are not going down. Jerome Powell is like holding strong, but I'm going to show you a factor, guys. The job market's not as it seems. He's going to, man, I think they're going to force, I don't know if they can force him, but yeah, they will. They'll force him to lower interest rates in September, which would be very good for our portfolios. Also, Brad Garlinghouse hinted that on the back end of September, the case may be wrapping up. So we'd have the case wrapping up around Ripple. We have Coinbase suing the SEC, which I'm going to show you in just a moment, looking to get, I think, Gary Gensler's emails, personal emails, right? The pressure is on. So when the pressure is on and they're about to get exposed personally, they're going to activate quickly. Okay, so things are going to switch like that, like a light bulb on the back end of September, on the back end of the year. And then 2025 is going to be that big run where 12 months, we can prepare our families for the future. The Fed has maintained the federal funds target at 5.25 to 5.50 range since 2023. Despite the projections, it may be cutting rates this year, a move that investors would welcome. We're all waiting for them to lower rates, and I'll explain that in just a moment. The Fed has delayed rate cuts for now because of the concerns that it has not yet squelched the inflation threat that led to rate hikes in the first place. So he hasn't got inflation down to 2%, okay? They're worried that if they lower interest rates, right, what's going to happen is inflation's going to go out of control, right? So when interest rates go down, money starts flowing like water. We could go into hyperinflation, right? There's people saying that, you know, there's people predicting that if Trump comes back into presidency, we may experience hyperinflation. There's all kinds of rumors, right? We just have to go day by day, but this is what we need to focus on, okay? So if they lower interest rates in September, your crypto, your stocks are going to go through the roof. Your housing prices are going to go through the roof. Okay. So now they're saying the job markets, they're doing okay, right? They're pretty favorable. It only went up about 1%. But let's find out of 200,000 jobs, where did those jobs come from? Think about this for just a moment. They're trying to shrink the balance sheet in the government. That's a hint. But I'm going to share with you in just a moment. They're going to tell us where those jobs came from. Remember, they're supposed to be shrinking the balance sheet for the government.
Steve Moore, your initial reaction while I dig into the report.
Well, I haven't seen the bottom line numbers below those ones you just declared, but it sounds like this is pretty much what people expected. You know, if you look at what we call the GDP now numbers, which are the forecasts of where the economy is based on the most recent data, about a month ago, they were expecting about 4% growth for the economy. Then it was 3%, then it was 2%. The latest forecast is 1.5%. I think this report is consistent with the idea the economy is slowing down. I can't wait to see those revision numbers because I think you probably are going to see a decline in those. But Cheryl, let us know when you have those numbers. The other thing is, look, the work week is way too low. We should. What was the number? 32.7. I think you said
32.3.
Yeah, we need to be up back about 38 hours a week. So people aren't getting the full-time jobs they want. And there is a big problem. Why are we growing government, Cheryl?
Yeah.
Here we go. This is where it comes in. Okay. So Biden's running on, you know, hey, our economy is great. It's the best it's ever been. It's a post-pandemic economy. People aren't working their full hours. We had a 19% cumulative inflation. People can't even pay their bills. And now they're going to share with you where these jobs are coming from.
God, we're running a $2 trillion deficit. I see this every month. We should be reducing government employment, not raising it.
Yeah, and Joe Livornia, that is exactly what I was going back through to just reconfirm in the report. And so we had last month, Joe, we had 40,000 government jobs.
Listen to this.
This month, 70,000 government jobs. And some would argue in an inflationary environment that we're going in the wrong direction with that.
Okay, I want you guys to hear that. So basically, they went up 30,000 jobs. So the increase was governmental jobs. We added 23 trillion to the balance sheet. They said that they're supposed to be cutting government spending. The job increase came from the government. It's like, how much can you keep padding these numbers, guys? At some point, you have to start to see this falter. Now, the good news about this, if you are an investor and you understand micro and macroeconomics, you are going to prosper very, very well. But remember, what goes up is going to come collapsing down because now the big asset managers are involved, number one. And number two is they need some exit liquidity. And number three, they're going to pull profits. Okay. So this shit is going to go parabolic and they are going to pull profits. So you should be operating even at a small scale the same way. You should be buying when everybody's running and you should be selling when everybody's coming in. Don't be coming in 2025 when finally the news convinces you that Bitcoin's the best thing ever. Okay. It's so important. Okay. But I wanted to share this with Good Morning Crypto. Abs, one of the greatest hosts in human history. Coinbase seeks access to SEC chair's personal emails back to 2018. Coinbase has urged the court to compel the SEC, Gary Gensler, to produce relevant documents, including personal emails during his time at MIT. Dang! And Coinbase is about to uncover the truth behind the SEC regulation by enforcement agenda. Man, this is getting wild. This is getting wild, family. This is like watching a soap opera. Now, the difference is we can get involved in the soap opera. The difference is we can invest in the soap opera. So I'm going to break down exactly what I'm doing on the back end of every video. Okay. So I use what's called the risk pyramid. I used to be in a vertical strategy. I went to school, had a job, had a 401k. 401 to me, I'm not saying anything wrong with a 401k, but I'm saying that's a game of hope, right? I'm hoping that on the back end of my life, that 401k, the market will be favorable. And if it's not, all the work I put in down here is for nothing. Imagine if you were retiring in between 2006 and 2008. You worked for 30 years and that was your retirement. And all of a sudden, everything collapsed. All that hard work and dedication. They have no vertical strategy. Our parents didn't teach us to go horizontal. They taught us vertical. Go to school, get a job, get a 401k. Well, the average person retires about 100. Average retirement counts about 194,000. The average American middle class needs to make about $150,000 to $160,000 to be middle class. Makes zero sense. We're heading off a cliff. So we have to stop and think for a moment. How do we fix this? If every single dollar in the system is debt, how do banks make money? 3 ways. You put your money in a bank, interest income, fee income, and capital markets income, and they insure their money. So I was like, wait a minute. What if I start operating like a bank? So I put my money, my earned income in the capital markets. I don't go buy stuff. When I get income that's on top of my net, my non-negotiables and my debts, I put it into the capital markets. I use cryptocurrency as a very speculative, extremely speculative asset at the top of the risk pyramid. High risk, super high return. When it starts to return, when everybody's getting excited, when I got in when everybody was running, I pull it from the top of the risk pyramid. Very simple strategy. That's all house money. I'm taking house money and I pull it down the risk pyramid. I insure my money. I put more money into my companies to create more cash flow, build better systems and process to increase our earned income. I put some money in precious metals, which is silver. I'm using Bitcoin for gold. Now we're heading into real estate for interest income, rental income, for depreciation and appreciation and the equity in the future. I'm not worried about the door, making money off the doors. It can make a lot more money in business. Okay. So that's the strategy I'm using. So right now I'm kind of in a holding strategy. I'm in a buying strategy. I'm in accumulating. Boom, it's going to start going up. I'm going to use Merlin, the smartest way to track your crypto. I'm going to exit the markets, pull it down, max fund my policies. And then from there, I have 3 things happening. Okay. I have businesses that are producing passive income. Okay. Eventually I'll have real estate that's giving me some tax liabilities, some appreciation and depreciation. That's my next realm of future investing. I'm not an expert in that area. That's where I have experts around me now that I'm working with. Okay. Insurance, that's one of my expertise. Okay. So with my insurance, I can protect my principal. I can borrow against the cash value and I'm compounding the house money. It's awesome, right? Precious metals, silver, and then I'm using Bitcoin as gold. I'm going to hold that long term. In the future, I can leverage against my Bitcoin, get tax-free. You're always getting loans from your assets, getting tax-free to buy more assets. Okay, the key to this is I'm working to get to the point where all my assets will pay for my net. Okay, from there, I'll buy things that I want. I will not buy things that I want until the net is paid for, till all the living expenses, debts, and non-negotiables are paid for by assets without my income from my businesses. Because the income from my businesses, I want to keep reinvesting into the markets and repeat this process. Richest man in Babylon. Once all the net is taken care of by assets, I will start buying fun things. And probably by that time, I won't even want it. Okay. It's wants versus needs. I have everything I need. I'm the richest man in the world, my relationship with Christ and God. Okay. So if you need support around this, okay, we can help you with retirement strategies. If you click the link down below in my bio here or in the description of the YouTube video, you can fill out a needs assessment. The proper team member reach out to you. If you go to my bio, click the link, fill out the needs assessment, fill it out thoroughly, and I'll have the proper team member reach out to you. So we can support you. It's an absolutely free consultation. So you can have that conversation. So you can see how we do these things. It's very important right now that we get out of that get rich quick mentality. We get out of that emotional state of mind. If you're, remember, billionaires use astrology, millionaires use charts. Ingrain that in your brain. I didn't say that. JP Morgan said that. Billionaires use astrology, millionaires use charts. Astrology always has been, always will be. Energy always has been, always will be. Charts are emotional. It's worldly. If your emotions are like the charts, you're going to get wrecked 100% of the time. If you understand the waves of energy, what goes up? Have you ever seen a market go up and stay up? Have you ever seen a market just stay up? Okay. If you look at Bitcoin zoomed out, it zooms up, but it goes woo, woo. Have you ever seen a market go straight up? So why would you operate like that? Why would you try to catch the top? It doesn't work that way. If you've never seen a market go straight up and always up, then why would you operate that way? Why wouldn't you do the inversion of it? When it collapses, you buy. If you believe in the long-term fundamental of the project, And when it goes up, you sell a little bit. And then when it goes down, you buy. You just do the opposite inversion. Like Jesus inverted all the teachings. Christ, Yeshua, inverted all the teachings from the Old Testament and New Testament. Invert everything, and you're going to be A-okay. So I love you guys. I appreciate you. As we always say, Warriors, rise, get your shit together. Love you guys.